Hello and welcome back to the FX Evolution trading course. Today we're going to be discussing channels and how to correctly identify and trade them within the Forex and other markets. Let's begin by taking a look at a horizontal channel. We can see here how price has become trapped within two zones. We have a line signifying up the top with a red line, and we have a green line signifying the bottom. So let's take a look at the touches to these zones and when we can correctly identify this as a horizontal channel. Here we have the first touch to the bottom area and the first touch to the top area. At this point, we know that these could be zones, but we cannot correctly identify a horizontal channel. When price comes back down and rejects the first touch area, we can start to draw this green line. Price then comes back up and again rejects the first touch area. We can draw this red line. At the second touch, we're going to be able to draw this as a horizontal channel and begin looking for patterns and trades within it. Two touches on each side makes a channel valid. So it's important to remember that rule. And I find that sometimes when people are checking out internet websites, it doesn't always tell you that two channels on each side will always, or two touches on each side will always validate a channel. So what we would do to trade the channel, we'd look to sell at this high here, or the red zone, this red line zone, because we know that what happened previously was that price rejected these zones and came back down to our green zone. So if we sold the market here, we'd be looking for a take profit at the bottom area of our channel, and we place the stop just above the previous peaks. So it can be quite a great risk reward trade. At the opposite side, we'd look to buy the bottom of the channel with the idea of price increasing over time and reaching back to our previous peaks on the top of the channel. We could continue doing this until the channel was broken. So sometimes channels can happen for a long period of time, and it's important to note, like other pattern recognition tools, we are able to use this on 5-minute charts, 1-hour charts, daily charts, even up to monthly charts, and it will still remain valid as a trading strategy. So you take profit when price hits the opposite side of the channel and reverse the position. So you'll look to take profit, then buy, take profit, then sell, take profit, and so on. Let's now take a look at an upward trending channel. Here we can see that we've got our first touch areas and our second touch areas, and at the second touch, once price breaks a new high here, we can now validate this channel. So the channel is valid after the second touches and price makes a new high above the previous peak. Now, because it's an upward channel, we should really only be looking at buying into the market and making profit from price increasing. As we've already discussed before, trend is your friend and you should always stick with the trend. So be looking at buying from the bottom end of the channel and taking profit at the top end of the channel. Let's now take a look at an example of a downward trending channel. So here again, we have our first touch areas and our second touch areas. We also know that the channel is now valid because price is broken below the previous low here, and we can start looking at potentially selling in this down channel. So the channel is valid. We would look to sell here and take profit at the low of our zone. Let's now look at another trading strategy that we can use with channel called channels breaks. So here we have our horizontal channel, but this time price has remained within, it's validated, but it's broken to a new high, probably taking out our stop if we chose to sell and buy within the channel. Because our stop was quite low, and we would have, for this case, only had the stop above the previous peaks, we wouldn't have lost much on this trade. But now what we can do is we can look to reverse that trade and buy into the upward market. Because we know this was a critical zone, we can choose to buy if it comes up or sell if it breaks to the low. And we also know, because it's a pattern, where to place our stop loss, which is below the previous lows. And also we know our take profit, so we can take the distance in our channel and then use that distance to project out our take profit area. So be looking at taking profit at the same distance as the channel length. Let's now take a look at a channel break within an upward trending channel. So in an up channel, we're looking for a break to the downside in this case. We'd then sell as it breaks past our downside. Again, we need to make sure that the channel was valid before any of these things occur. And we place a stop loss above the previous high of the channel. We could then take the distance of the channel and project that out to form our take profit area. So let's now take a look at how to trade a channel break in a down channel. So we're looking for the break to the upside in this case. We've already validated that this channel was correct before this break happened. And we're looking to buy the market as it breaks out with a stop below the previous low and a take profit of the distance of the channel. So take profit here in this area. That concludes the video for today, and we'll see you in the next video.